We now move on to the sixth topic and actually the last point that we need to learn and focus on in this subject of candlestick psychology, which is the discussion of rejection and the confidence of buyers and sellers. In fact, we want to fully analyze weak and strong candlesticks here. This might somewhat resemble the discussion on the body to shadow ratio, but it's a bit different. I've explained each of these for you again, clarifying what each one is. In the discussion on the body to shadow ratio, we drew 5 candlesticks here. Friends, let me draw these again. I'm really trying hard to draw them straight. Look, we've drawn 5 different scenarios in this topic and explained which one is strong and which one is weak, but I didn't explain to you what each one represents and what their story is. Let me draw them and now I'll explain one by one what each of them indicates. To easily and freely register with the quotex broker, click on the link in the video description. So these were the 5 scenarios that I explained to you earlier. Look, friends, in green candlesticks, if the upper shadow is smaller than the body, like here where the upper shadow is smaller than the body, this actually shows the buyer's confidence. It means the buyers had the confidence to push the price up to this level, and then it came back down and stabilized here. The price closed at this point. This is what we call buyer confidence, which is the confidence of the buyers in green candlesticks. I'll redraw it for red candlesticks, but it's the opposite. Here it was the buyer's confidence that pushed the price up to this level, but then it came back down and stabilized here. If in this same scenario with green candlesticks, the upper shadow is larger than the body, and we see a very large shadow at the top, it's no longer about buyer confidence. This indicates seller rejection. It means the buyers pushed the price up to a certain level, but the sellers rejected it, increasing selling pressure, and the price came back down to this point. Look, friends, the point here is that I explained earlier that these two candlesticks are strong and these are weak. The reason is that in the strong candlestick, the buyers had enough confidence to push the price up to this level, but it came down a bit and stabilized close to that point. However, in a situation like this, the buyers did everything they could to push the price up, but they couldn't resist the sellers, and the price was rejected by the sellers and came down to this point. This is called seller rejection, meaning the sellers increased the pressure and rejected the price down to this level. Here again, this becomes buyer confidence. Like in this part, this was the buyer's confidence, and this one is actually seller rejection. Now, in the case of green candlesticks, we discussed the upper shadows, but what do the lower shadows mean? The lower shadows are the opposite. In the case of small lower shadows, this indicates buyer rejection, meaning there were few sellers in the market. The sellers pushed the price down to this point when the candle opened, but the buyers strongly rejected it. And we see that in the end, they pushed the price up to this level where it closed. So there were few sellers in the market. The price tried hard to come down, but it couldn't. The sellers' pressure was weak and they couldn't push the price further down. But what do these lower shadows mean? In such a scenario, the sellers made a very strong move, pushing the price down to this level. However, they couldn't sustain it, and the price was eventually brought back up and closed here by the buyers. Since the sellers initially made a strong move, this is referred to as seller confidence. So in this situation, it represents the seller's confidence again. These are all examples of buyer rejection as I explained earlier regarding the upper part. To summarize, this green candlestick is a strong bullish candlestick. This green candlestick is a strong bullish candlestick. It's a strong upward candlestick because there were very few sellers in the market, but we can see that the buyers came in with strength, took control of the market, and were confident enough to push the price even higher, although it closed near that point. This candlestick can be considered a relatively average one. This one is similar as well because we can see that the buyers tried to push the price up, but the sellers rejected it. So we can see that the number of sellers wasn't small and their strength wasn't weak, as they were able to push the price back down to this level. Therefore, this candlestick has relatively moderate strength. But this last candlestick is a very weak one. It's a weak candlestick that we shouldn't trust at all. In this scenario, not only was it rejected and turned around, but we can also see how much confidence the sellers had. In a way, the market is now in the hands of the sellers. With a candlestick like this, we can see that the sellers are showing strong presence and are trying to take control of the market. Now, because I think these are important concepts, I'll also explain them for red candlesticks. I apologize, but please give me a moment to redraw the 5 candlesticks. I'm not sure why drawing these is so difficult for me. I wish I had prepared them in PowerPoint beforehand to save your time, but I hope you'll forgive me. I'll draw them faster this time, even though they're not turning out great. This last one really didn't come out well at all. Well, these are the 5 modes of red candles. The first one has no shadow. The second one has 2 small shadows above and below. The third has a long shadow at the top and a small one at the bottom. The fourth is the opposite. This is the last one that both shadows. They are tall. So friends, in this case with red candlesticks, the short upper shadow represents seller rejection. This means a few buyers entered the market, tried to push the price up, and succeeded to some extent, but the sellers quickly rejected it and brought the price back down. This is known as seller rejection. Now these 2 long shadows above the candlestick, where their length is greater than the candlestick body, represent buyer confidence. The buyers were confident enough to push the price up to this point, but the sellers managed to turn it around and close the price at this lower level. These lower shadows, like this one and this one, actually represent seller confidence. The sellers pushed the price down to this level and tried to close it even lower, but the price went up a bit and stabilized near this point. This is what we refer to as seller confidence. And in this case, with these 2 long lower shadows, what do they represent, friends? These 2 represent buyer rejection. This means the sellers pushed the price down significantly, but there were a lot of buyers in the market and the relative strength of the buyers increased. They managed to reject the lower price and push it back up. This is called buyer rejection. So as we mentioned, this candlestick is a very strong one. This candlestick is very strong. Now let me mark it in red. These 2 candlesticks are very strong and they are powerful red and bearish candlesticks. These 2 are average candlesticks, so let's mark them like this. They are average. And this last one is a completely weak candlestick. This means in this one, the strength of the buyers is showing that it's increasing significantly. Alright friends, now we've learned 6 important rules or principles of candlestick psychology. With these in mind, we'll start predicting future candlesticks. These are very important points, and I've repeatedly emphasized in various videos that you shouldn't be searching for a specific strategy where they teach you some fixed rules and throw a few indicators and oscillators on a chart to follow. To trade successfully, you need to understand the market and candlesticks, learn what each candlestick is telling us, and grasp what the market means at different points and locations. With that understanding, you can build your own strategy and make successful trades. Candlestick psychology, candlestick patterns, and price action are extremely important. You might feel a bit confused at first, But with a lot of practice and mastering these principles, you can achieve long-term success and become a successful trader. Don't look for strange or varied strategies. Focus on learning the fundamentals of the market and mastering the core principles. I've mentioned this many times, but unfortunately in my own channel, I see that the videos where I talk about a specific strategy get a lot of views, while the candlestick analysis videos and those where I explain different chart points and provide various analyses, which are much more important, get significantly fewer views. Make sure to learn these essential points because they are the foundation of the market, and by learning them, you can become a successful trader. It's not about learning a special strategy and doing a few trades with it. Don't aim for quick money, aim to master the fundamentals. Dear friends, to make sure you don't miss any of our videos, please subscribe to the BS Academy channel. Also, activate the notification bell so that you are informed as soon as we publish new videos. Thank you for your support.